Hey, good afternoon, everyone. My name is Kathleen O'Regan, and I'm a Senior Executive in the Sustainability and Renewable Energy Department of Enterprise Ireland. And I'm joined today by my colleague, Ankush Shirsat. So you're all very welcome to today's webinar on how to prioritise sustainability issues. We are hosting today's webinar in collaboration with Centigo. So just to note before we begin that today's webinar is being recorded, and we will share the recording and the slides afterwards. We'll have time at the end for question and answers. So if you have any questions during the webinar, please pop them into the chat and we'll hopefully be able to answer them at the end. Sustainability is a strategic business imperative for business, and it's not a nice to have anymore, it's a must have. And what we find when talking to companies is that while most companies have carried out activities to improve their sustainability performance, most have yet to develop their sustainability strategy and action plan. And we strongly believe that a sustainability strategy and action plan is vital to long-term business success, whatever the size or the sector of your company. One of our previous webinars was on how to develop a sustainability strategy and action plan. And one of the steps highlighted in that webinar was to actually prioritise the sustainability issues relevant to your business. So this webinar is a deeper dive into that prioritisation assessment, because not all sustainability issues are relevant to every company, and it can be hard to know where to start, what areas to focus on, what areas to prioritise. So a prioritisation assessment, which is also called a materiality assessment, helps to identify, well, what are the relevant environmental, social and business conduct material issues for your company. The outcomes of this assessment will then form the basis of your company's sustainability strategy and action plan, and will help your company become more sustainable, more innovative and more profitable. So today's webinar will provide key insights to help small and medium enterprises identify sustainability issues relevant to their company. And we will have another webinar in 2 weeks' time on how to carry out a materiality assessment. This webinar will provide key insights to companies who are in scope of CSRD, and also to companies that are voluntarily reporting in line with the CSRD standards guidance and the EFRAG guidance. So for both webinars, we're joined by an expert panel led by Dr. Ray Nolte of Centigo. Ray is an experienced management consultant with over 35 years experience working with Centigo at the moment. He's managing partner, which is a Swedish-based management consulting firm, and has a strong track record in helping clients tackle strategic and transformation challenges of sustainability across various industries. Prior to his role at Centigo, Ray held international leadership positions in notable, the screen has changed there, but in notable consulting firms such as Berkeley Research Group, Navigant Consulting, IBM Business Consulting Services, and PM Consulting Group. Throughout his career, Ray has advised company boards, senior executives, regulators, and policymakers on various business issues. He has also served as the chairperson for several prominent organisations in the technology, communications, health, education, and not-for-profit sectors. Ray's primary area of focus is assisting organisations in developing sustainable strategies to innovate their business models and disrupt the market. He's deeply interested in thought leadership and has conducted extensive research in sustainable innovation. This research has involved interviewing over 300 C-suite executives and industry leaders globally to support his client work and academic endeavours. Additionally, Ray is a frequent guest lecturer on innovation and strategy at executive development programs in leading graduate schools in the United States. He holds a doctorate in scenario planning and another doctorate in technology-enabled change. So Ray, you're very welcome to join us today. Ray is also going to be joined by Martin Massey, who is author of Climate Change, Enterprise Risk Management, a practical guide to reaching net zero goals, and a Cambridge University lecturer on ESG. We are also joined by Nick Gowing, leading authority on sustainability and advisor to the world and industry leaders on the topic, and also author of Thinking the Unthinkable. And we are joined by Oscar Garcia Gabeza, who works with companies internationally on their sustainability preparation. And finally, we are joined by Michael Costello, who's a partner at BDO. And BDO audit their client companies to ensure that they have reported on their sustainability progress in line with regulations and customer needs. So I'll hand over to you, Ray, and I'll pop in then at the end for the Q&A. So thanks very much.
Thank you, Kathleen. We've done the introductions, which is great. Just our agenda, we're going to cover, firstly, business priorities in a sustainable world. Then we'll be talking about how do you assess those sustainability priorities. And finally, some lessons and tips and questions and answers. During the webinar, I will be calling on my colleagues from the panel to contribute to the process. So it's going to be a conversation between me and them, as well as me providing some guidance overall on the issues associated with this. So I guess the first thing that's really quite important is to look at the relationship between strategy and sustainability, or ESG. The European Union Corporate Sustainability Reporting Directive, CSRD, clearly requires that businesses assess the impact of outside-in factors and climate adaptation and transition on their strategy. And what I'd like to do is just try out a question just to my colleagues, just to warm them up. And maybe I'll start with Nick. What is the relationship, in your view, between corporate strategy and sustainability?
It's still quite flaky. I don't think that most corporates have yet gripped the enormity of it, even if they've got chief sustainability officers. It is not yet embedded in strategic thinking. And my research certainly produces the very clear impression that a lot more work has to be done, a lot more confidence has to be generated, but it's moving in the right direction, and it's begun ready to move fast.
Thank you, Nick. Michael, would you have anything to add to that?
I think for the moment, most companies see these as two very separate things. But going forward, for them to be in any way effective, they're going to have to be fully integrated, so that your ESG targets and strategy have to be an integral part of your corporate strategy, I think, going forward.
Yeah, thanks, Michael. I mean, our experience, and we work very closely together with BDO, we have a partnership with them, and with our large clients, they basically don't see any difference between their ESG strategy and their corporate strategy. In fact, they're not writing ESG strategies, they are revising their corporate strategies for sustainability. You know, they share their vision and their mission, have sustainability built into them. And I think you'll see, certainly with some of the commercial semi-states and some of the very larger organizations around the world, this distinction has actually gone. So very much strategy and sustainability are intertwined. Martin, do you have any views on this? You're on mute, Martin. Martin is still on mute. Oscar?
All right, yeah, I'm on now. Apologies for that. Yeah, I mean, I help organizations in terms of integration of ESG into the enterprise risk management frameworks. And one of the most important areas is around risk appetite strategy. So that's the area that I've been focusing on, and I teach in my course at Cambridge. I mean, developing or integrating ESG risks into risk appetite strategies is probably the most relevant concept, looking at, you know, how risks need to be integrated, you know, what companies need to seek, minimize or avoid in terms of risk preferences, setting key risk indicators is a critical area. We're seeing a lot of focus now on developing dashboards to manage and set targets across various ESG risks and manage those. And that's becoming a key focal point for executive reporting. So I think that's one of my main focus areas that I'm seeing a lot of companies focus on, is that whole integration of ESG risks into their enterprise risk management frameworks, but also into their risk appetite strategies.
Thank you, Martin. Now, Oscar, you have experience working right across the world, and certainly South America, North America, and Europe, with your customers on this. Do you think they've got this connection between strategy and sustainability?
Well, thank you for inviting me, you know, to participate in the webinar. Not really. The reality in our experience is that companies, in particular SMEs, are in a very early stage to understand what's behind ESG. When we try to explain, you know, the process, I like to make a similarity 50 years back with accounting or financial standards, right? In the beginning, companies were using this to understand basically the use of a single resource, which is basically cash, right? The sources, the funding, etc. Then they move to better understand, the profitability of the company, because some stakeholders around markets, lenders, clients, suppliers were interested in having a deeper view on how the companies were doing from a profitability perspective. And then the companies, because they are more trained, better management, etc., they are understanding profitability to better understand future improvement opportunities. In our opinion, ESG is more or less the same. The only difference is that finance or accounting standards or financial standards were focused only in a single source, which is cash. ESG tries to help the companies to understand other three different resources the company is using: energy, people, or governance. So to us, the first step, Ray, is to let the companies understand that ESG is not about reporting. It's about understanding how they are using these three super valuable resources and how they can identify business opportunities in there. I think that we are still struggling, in getting the companies, understanding, this approach rather than simply reporting because someone, regulator, client, supplier, whoever is asking for additional disclosure.
Thank you. I think that really leads on nicely to this slide here. It's a little bit complicated, but this is one that we often use with our clients to understand where are they coming from on sustainability. And we take it from a number of perspectives. Like we have some clients, particularly SMEs, are doing it because actually it's the right thing to do. And they recognize that they have an important role and that they can actually innovate maybe their products to do it, but fundamentally they're driven by it's a right thing to do. The second one is many organizations, in particular SMEs, find that actually they probably wouldn't do it, only for their customers are actually asking to do it, but they are concerned that if they don't do it, they will actually lose their revenue or they won't be able to grow their business. So there's a choice there. Do we want to go from a minimum alignment with customers' requirements, or do we actually want to work and partner with them closely in terms of actually achieving their own ESG objectives? And then there's a lot of organizations, I know myself and Michael talk about this, the tail wagging the dog. A lot of organizations are doing it because it's a compliant perspective rather than because actually it's good business or they can see the strategic benefits from it. And from a compliance point of view, you can actually go for minimum compliance or you can actually go for, gold-plated compliance. The trouble with all these questions that you've got is there's a time frame as well. Like, if you're following, say, the VSME, the voluntary standard, or you're following CSRD, how far down the road do you have to go? How much expense do you have to pay in terms of getting ready? Can you take advantage of any of the lesser reporting requirements that you have under some of these and gradually build it up? And then finally, there's the strategic perspective. How will this help you improve the efficiency, the competitiveness, the attractiveness of your products associated with this? And, all of these things are related to each other, and you can't just take one decision on its own. It's complex. And for many organizations, having a view of what's the scope, first of all, that's incurred here. Like most organizations don't see sustainability as anything beyond their own organization. And when they begin to look at compliance and what customers are looking for, it actually goes way beyond the organization to their value chain. So understanding that scope and where you want to go is a critical part of actually trying to establish what your priorities are. Because the priorities have to be your business priorities, and they drive the approach that you're going to take to sustainability. So what I'd like to do is to throw out to the panel, my colleagues, is in their experience, what sort of choices are organizations taking which influence their approach to prioritizing sustainability? Can I throw that one out to Michael first?
I think, Ray, you quite rightly said there's a range of responses that companies have to this. And really what you're trying to ask yourself is, where do you want to be on the spectrum from a follower to a leader? And there's different drivers, as you've said. So some companies involved say, for instance, in the food industry, they feel that, you know, doing the right thing and having a quality product is really a big part of their business. And therefore, they want to be a leader in sustainability issues. And other companies want to be just minimally compliant. So these questions are important at the start of the journey to decide, you know, what is your ambition in relation to sustainability? Not all companies will adopt it to the same degree. And it's important to ask yourselves these questions. Some of your customers may decide that you have to be come up to a certain level of quality and sustainability, and that will be the driver for you. And in other businesses, that will be decided by the shareholders, because the shareholders want to have sustainable businesses and invest in sustainable businesses. And even your banks, your funders in the future will have an influence on where you are on this spectrum. So a lot of choices to be made, but really important for companies to try and understand what is driving their sustainability journey.
Thanks, Michael. I mean, we've seen situations where, for example, AWS have driven their suppliers to be, you know, uber ready for sustainability. And they've been asking things for life cycle analysis. They've been asking for certification using ISO. They've been asking for lots of really deep level, difficult information to provide. And then we've seen other customers who are saying, well, actually, I don't really care where the market's going is. I'm just so committed to this. So we've a client in Australia that we work very closely with, and they're producing sustainable beauty products. And they're saying, well, you know, if the product isn't organic, if it isn't natural, and if you can't actually take it orally and it does you good, why would you put it on your face? So there's organizations which have very strong principles around this, and there are emerging organizations as well who are using this as a basis to really grow their business. So it really depends on the situation the organization finds it in. I just asked Nick, because Nick is dealing with these issues on a regular basis with sort of industry leaders, and he understands the dependence that these larger organizations are on the SME sector. Nick, what's your view on this? You're on mute, Nick.
Let me just pick up two themes here. I've generated an organization called Thinking the Unthinkable. And to many out there, what we're talking about is still unthinkable. The word we should be using is unpalatable. Everyone in business now needs to take a decision about where they position themselves. And these important questions, Ray, you've put up there, the sustainability conundrum, everyone has to be taking a decision. Even if your decision is not to get engaged at the moment, that is a decision. And I would put to you that now is behind the curve of the inevitability of what's happening. The other thing that you've got to do is generate what I call mind muscle. You've got to think beyond your natural comfort zone. This is not going to go away. We can dispute what sustainability is. We can dispute what the word means. We can dispute what all the principles are behind sustainability. But this is now about something which is very fundamental. It's about existential threats, both to the community in which we live and also to the kind of business environment in which all of us are living, including a society. And I'm quoting here Eamon Ryan, the Environment Minister, who last week in New York, and I saw him say this is now about raising public consciousness, his words. And that's reflected right across the world at the moment. But people, particularly in SMEs, who are struggling with financial liquidity, are struggling as well as to whether they need to do it. The answer is yes, you do need to do it, and you don't need to be frightened by it.
Thank you, Nick. This brings us on to this slide here. You know, if you look at any business, this slide probably represents a lot of challenges that they've got. You know, profitability, cash flow, being able to scale or grow their business, make sure that their products and services meet market demand, make sure they're operationally efficient, deal with risk management issues, etc. You could argue that none of these have anything to do with sustainability, but I would argue that actually all of these points have a sustainability element to it. And so we look at sort of the traditional business priorities versus sustainable business priorities. There's a variation of them. So, you know, the primary focus for a lot of businesses, profitability and survival. But actually a sustainable business just looks at profitability and sustainability or survival over a longer term, balancing a combination of profit, social and environmental issues. The time frame for sustainability is long term, whereas businesses tend to have a short term focus. And when you go down this list, you can see that there's a huge overlap between the two. It's just a matter of emphasis, timing, approach, but the relationship between the two are very similar. And so I just want to try out again to the panel. How can companies square the circle between business and sustainable priorities? You've got fires to put out, you've got cash flow issues, you've been asked to do this reporting, etc. So I'm going to throw this one out to Oscar. How do you find that businesses are trying to do that?
All right. Well, the first comment rate is just an overall comment in here. I think all companies since the very beginning have been trying to be sustainable. At the end of the day, sustainability means to last, right? So in one way or another, since the very beginning, the problem is that now we are identifying sustainability with a very specific area. And in some occasions, this is misunderstood. By definition, any entrepreneur trying to build up a new project is trying to make it sustainable, to get that project succeeding for a long run. So the point here is that, in our opinion, there is a misunderstanding. The ESG, this reporting, sustainability debate that we are having right now is just another tool to help the companies to last longer in a stronger shape. The issue we have now in our experience, Ray, is that companies are approaching this in a very binary way. You have all those companies which are just simply reacting. So basically, they understand that this is a new reporting that they have to go through because their large clients are asking for, because the banks are asking for, or because the market is asking for. So probably you might consider those as followers. And there are some other companies which are, in our opinion, much more interesting, that they have already identified business opportunities, and they are using this new space as a field to identify new business opportunities. Let me give you an example. There are several studies there, for example, in the hotel industry, where it is clear right now that travelers are willing to pay more per night to those hotels which are more sustainable, simply because there is that consciousness there in the market. Martin mentioned earlier, the agribusiness industry. There is a clear sensitivity there in the society to identify through life cycle products or assessment for products which are more sustainable. So just to simplify, I think this is pretty binary. There are companies focused only on reporting. They don't understand the opportunity. They don't understand why this is happening, and consider it just a burden. And there are some others which are more focused in profitability, in business opportunities associated to this. Of course, the most interesting one are the latter, right? The second ones. The problem is that we are in a very early stage, and we need to help those companies to understand that, how to move from a simple reporting approach into a business approach associated with sustainability.
Thank you, Oscar. Martin, if I can ask you, you're a well-known professor on risk management and lecturing at Cambridge, and you've got a lot of graduate students, business professionals coming to your course. How do they reconcile sustainability with risk?
Yeah, thanks, Ray. What I'm focusing on, and I've been advising a lot of risk departments, and a lot of people coming on the course actually either come from a risk management background or sustainable background. There's obviously different stakeholders with different backgrounds. What we're focusing on is really looking at material issues affecting the risk profile of the organization and business objectives. And traditional risk management processes actually work really well. But I think 2 points that are different to a traditional, when you design a corporate risk register, and you obviously want to focus on the top risk, is, as you pointed out, opportunities, because a lot of opportunities that come from sustainability, like product innovation, for example, and time horizon. So a lot of the risks that we're seeing, occur over a long period of time, and you need to then use different sort of risk management tools. And so in the course at Cambridge, we do teach a number of different tools and techniques, I think, in combination, are very effective. So, for example, developing risk radars, looking at horizon scanning around mapping out emerging risks over different time horizons. Using traditional approaches like risk assessment criteria is still very helpful, because ultimately you need to prioritize. But if you focus on ESG risks, and a lot of them are crossover risk as well, so it's just making sure you have the right taxonomy, alignment to traditional risk management, I suppose, categorizations, but also then supplement with new techniques like double materiality exercises, which I think is coming becoming quite helpful, because you do need to look at the external environment. And I think a lot of sustainable risks are actually external to the organization, and there's a requirement to look at the external risk facing the organization. So I think it's a going back to the traditional risk management process of identification, assessment through to reporting and monitoring is still a very effective way to manage ESG risks. It's just the context that's different. Thank you, Martin.
What I want to take a look now is what it takes to create a sustainable business, and how do you look at that through the sustainability lens. The first thing I would say is that, and this is encouraged by and demanded indeed by the CSRD, is that it's not just E, S, and G. It's also, and it goes back to Oscar's point, it's about the viability, the sustainability of the organization. So finance is also included. So you would never look at ESG on its own without actually considering the financial implications, the implications for the financial sustainability of the organization. Now, whilst this is a reporting mechanism that we're looking at through CSRD and the voluntary standard, which we'll be talking about in a few minutes, it's very much geared towards what is best practice. How do we make businesses more viable? And whilst it's all very well talking about reporting, it's actually achieving results. That's what they want. They want you to be able to adapt and transition to a more sustainable world, which has myriad benefits, which addresses indeed existential threats that we could face as an organization. So how do you actually deliver on what you're committing to deliver? It's through things like operational efficiency. It's through processes like lean. It's through processes about upskilling and improving your workforce. It's about collaboration with partners in terms of innovation. It's about actually meeting your customer demands for sustainable products and more efficient and products which use less resources. It's about addressing key social issues. It's about having very strong and capable leaders and management within your organization. It's about addressing organizational risks. It's about creating competitive advantage. So this is back to our point earlier that sustainability and strategy aren't that different, and E, S, G, and F are very much geared towards addressing the competitive and sustainability position of an organization. So what I'm going to do is just ask, again, my colleagues on the panel a question. How do you align sustainable priorities with this E, S, G, and F? Michael.
This area is full of acronyms, and people have started to understand what E, S, and G, and now we've added F to it just to confuse people. But really what it's saying is that all these are interconnected issues. When you drill down into the individual elements under E, there are understandable concepts around energy and pollution and natural resources. Under S, there are also understandable things around your own workforce and the workforce in your value chain. So in each of these areas, the individual items are definitely understandable and doable. The bit that makes this complex is that all of them have to be looked at in conjunction with each other. And finance is the one common denominator across all of these, because we've got to take into account the impact of all these initiatives and targets on the company, and there are costs involved, but there are also savings. So, it's as important to look at the financial opportunities as the financial costs when you're going through this exercise. We did this with Ray a couple of years ago, and it made a lot of sense to us when we included when we included finance and the money aspect as we went through the exercise.
Thanks, Michael. So very much, this is about organizational transformation, and there's a requirement for us to transform to be in this much more sustainable world. Oscar, do you find that many of your clients recognize the need to transform as they're going through this process?
Back to my previous answer, rate only those which are already or has already identified business opportunities associated to sustainability. The others are still in the process of understanding, complying with the reporting requirements from different stakeholders, and to that extent, probably we should differentiate a little bit among industries. There are some industries which are really well advanced in understanding and bringing business opportunities associated to sustainability. There are some others which are still followers, and they are still struggling in understanding what's behind. So basically, the point in here, and is one of the triggers to improve in terms of sustainability, is not only the social movement or requirements or consciousness about this. It's also about helping companies to identify where the money is associated to sustainability. I think that is a clear driver to get more and more companies engaged with this concept. And third, it's super important that the capital markets and the lenders, the funders, are basically more and more engaged as well to incentivize the sustainability through cheaper funding sources associated to the compliance with certain standards. So to that extent, Ray, is super interesting that you bring the F to this slide, not only for profitability or financial stability or competitive advantage, also for funding. We need the banks, we need the capital markets, we need the asset managers and the investors willing, to trust more and then to lower the cost of funding to companies which are in higher standards in terms of sustainability. So to us, beyond the reporting requirements, it is business opportunities, and it is more funding associated to sustainability, higher standards, the two key drivers, to help accelerating the process.
Thank you, Oscar. Nick, 95% in most developed economies of businesses are small, medium-sized enterprises. And, but we all realize that, the top 500 businesses in the world are well developed and progressed in many cases on their ESG and F journey. So how do you convince, and how do larger organizations try and convince the smaller organizations within their supply chain that they actually need to do something?
Well, in the end, it's going to be down to denying them business. And that's what we're already seeing. Those in the supply chain who are thinking that they can keep doing it the same way that they've always done it are really suffering because they haven't seen the signs. And I think there are a couple of concepts I'd like to get over here, Ray. First of all, it's about liberating. It's about liberating the minds of executives and those running companies from the way they've been doing it. You've got to think in a very different way. And I've got to say that it can be done in a very positive way. There's no way that this should be seen as a threat. It should be seen as a real opportunity. And that's something I would emphasize very strongly. And I go back to creating the new mind muscle. And the other thing that certainly in Thinking the Unthinkable, we've identified, and many executives sort of quietly nod their head in agreement, is there's a real battle with conformity. The way you've been doing it and what qualified you for your job and your position is no longer appropriate for what you've now got to do. And it isn't just going to evolve by itself. You've got to do it and actively engage and take advice from people, listen to the stories of others who've taken the risk and have succeeded. There are increasing numbers of success stories here, Ray, of companies who are large, but also the smaller companies, the SMEs, who are proving that actually you can do things in a different way. And even if there's some pain and there's some wobble and there's some bumps, actually, by and large, you come through in a very positive way. But that transition, it's not just transformation, it's transition, is not an easy thing for anyone to confront, particularly at the speed it's got to be done, given the science, the way science is developing in a rather ominous and sinister way.
Thank you. One of the things that we often find with our clients is that they're trying to align themselves to the UN Sustainable Development Goals to set priorities. And those 17 goals are brilliant for helping to set the scope, but in fact, there's little detailed definition. There are a few measures around it. And then when you're actually confronted with this, behemoth of CSRD, which is not only impacting larger organizations, but it's driving down their value chain, how do you reconcile the two together? And, effectively what we're seeing is that prioritization now is shifting towards the standards which support CSRD, that's the ESRS standards, and they are now becoming the de facto basis for a lot of organizations to set priorities. So just as Michael mentioned earlier, when you actually go through E, you see things like pollution, water usage, biodiversity, things like that, and more organizations are using those elements or topics and subtopics and sub-subtopics associated with it to actually drive their priorities. The issue that we have is that for specific industries, they're a bit generic, and we're having to go through to industry issues as well to supplement this from a reporting point of view. Michael, you're for certain organizations, who are under a reporting framework, you will be, your organization is going to be giving independence assurance on it. And, even those organizations which aren't impacted directly yet by this regulation, they're having to provide independent assurance as suppliers to these organizations. What are the challenges that you see are there to meet these reporting priorities?
Thanks, Ray. Yeah, companies have a huge challenge to meet this reporting requirement. It's as if we all just invented financial accounting and decided people had to do financial statements and they had to train their teams without the benefit of any financial standards or auditing standards, and they had to put that in place in a 2-year period. So it's an enormous challenge to get your head around CSRD and the reporting requirements required for that. It is pretty equivalent to the effort that companies put into do their financial reporting and their auditing. So that all has to be done without any prior experience, without any trained staff, and with very little support out there for how it can be done. So I couldn't, overemphasize really the challenge that companies have to meet their reporting requirements. And it can only really be done if the most senior people in the company, the CEO, the board, and the senior execs really commit to this and put the right resources behind it. We see a lot of companies adding this requirement to an already very busy schedule for instance, their finance team. And we think that will lead to serious problems because the finance team are completely stretched as they are. And to add this additional requirement to them is, I think, destined to fail. And dedicated resources is the answer here, both internal and with the help of some external resources.
Thanks, Michael. I've just, following on from that, I've just pulled up here the reference to the SME. And this is the voluntary standard for small and medium-sized enterprises, which don't yet have to follow CSRD. But it's pretty well aligned. It's done by the same people, EFRAG, who've set out the ESRS requirements for CSRD. And as you can see here, the disclosures that are required under this voluntary requirement are, around how do you transition to a more sustainable economy, How are you going to deal with your energy issues, your pollution issues, biodiversity, water, how you treat your circular economy, your workforce, the issues associated with other workforces that you're working with in the value chain. Have you had any convictions or fines or corruptions for bribery along G? So, it's a very readable report, but, what we're going to find is that organizations who have to comply with the full CSRD are going to be recommending organizations to actually follow this because of their suppliers. At least they can actually match and map what one organization is doing versus what they're trying to do. So we expect this to be a really important driver. And to that end, we've had discussions over the last few months with organizations who are trying to comply with this voluntary requirement, who are actually saying, well, we're going to have to start pulling data from January. We're going to have to make sure that the operations people are responsible for pulling this data. We can't get the finance people, as Michael said, to do it. We have to, there are certain systems that we're running, and there's certain gaps in data that we've got that we're going to have to address over the period to make sure that we have the data, the processes work, and that we haven't got this huge overhead or inability to provide our customers with data. So just asking my colleagues on the panel, what do you think is going to be the impact of the SME likely to have on business priorities? Oscar.
First thing, I think companies should bear in mind that two forces are basically convergent regarding reporting. One is the regulatory frameworks, irrespective this is compulsory or is voluntary. And the second force is the economic and business ecosystem, which is basically, the idea behind this is that more and more large corporates, banks, and the market is requesting this information. So probably companies should bear in mind that even when we are calling or qualifying this as voluntary, there are other regulatory or reporting requests from private stakeholders, which in our opinion, in particular for SMEs, are the most important ones. Irrespective if a company is willing to provide this information voluntary or not, they will be requested to provide a significant amount of information around sustainability. Let me give you an example. In Portugal, for example, there is a common ecosystem where all the banks, 17 banks in that country, has developed and set up a platform to request ESG information from all banking clients. Most of those, 90% of those banks clients are SMEs. They will have to provide this information irrespective they want to go through the voluntary reporting exercise. In Germany, you have the LKSG regulation, where large corporates are obliged to gather information around sustainability from their supplier. In the Nordics, you have another frameworks which are basically based in requesting more and more information. So to me, it's very important to send this message. In the very short run, most companies will have to be ready to provide information, irrespective this is not under any regulatory framework. Said this and understanding this situation, right? You said right. We need to bring technology to help the companies to gather that information, to have under control, all the internal processes which are under scrutiny around sustainability, to make that process of reporting privately or regulatory, the process of providing that information. That is the main concerns that SMEs are having right now. How to address this information or reporting request from not voluntarily, but from their own clients or their own funders.
Thank you for that. Nick, you have your hand up.
Very quickly, just to build on what Oscar is saying, I think, to put it bluntly, it's going to create a cold sweat for many people running companies, particularly SMEs, because much of the data and the expectation simply doesn't exist at the moment. Quite often the data being demanded simply isn't known to those who are running companies. This is a major, major challenge, including for large companies, to find the data, to work out how it's going to be collected, and then work out, as we discovered a few weeks ago in one of our workshops, we discovered that there is no Excel sheet that you can fill in for this. It's much more developed and much more sensitive and much more complicated than just assuming you've got the data.
Thank you, Nick. And just Martin mentioned earlier this materiality assessment, and yeah, materiality assessment is an important part of your process in transitioning your organization to sustainability. And effectively, what that means is, you need to identify the highest priority issues that impact your organization and your stakeholders, and you need to understand how these external threats, also from an environmental point of view and a social point of view, actually impact your business, and you to report on them. So the idea of priorities or sustainability assessment is very key to your transition to sustainability, and also in terms of your sustainability reporting. Materiality assessment that organizations carry out is the process of defining, refining, and assessing all the potential environmental, social, and governance issues that could impact your business. And then what you do is you actually work very closely with your stakeholders. That's a requirement. And you will be asked as a stakeholder of maybe some other organizations, which are part of their value chain, to participate in processes which actually help to set the prioritization of these topics, sustainability topics. And these will actually are used to inform not only your, but your value chains, strategy, your targets, and your reporting requirements. Now, whilst we said that there's kind of a lag here, and there's a difference between large organizations and smaller organizations, if you consider that 92% of the world's largest organizations, of the largest 250 organizations, already carry out this process, you can begin to see how quickly this is actually beginning to actually flow down into their supply chain. And you can see that materiality reporting frameworks and even publication for some organizations of their materiality, their priorities, is now becoming standard. We didn't see those before, but we're actually seeing separate reports on this. So this slide here just illustrates some of the benefits why you should actually look at materiality, not just from a sustainability point of view, but I think we've covered a lot of these topics already. It actually allows you to take advantage of opportunities. We look at not only the impacts, the risks, but also the opportunities, as many of the panelists have mentioned. It's about prioritizing your resources and your activities. It's about prioritizing where you need to manage and monitor issues that are very important to your business, to your suppliers, and to your customers, and identifying how you can actually address that. And so really what we're finding is that, and it's back to how does this link to your strategy? Essentially, what we're trying to do here is to develop a much better understanding of how our business actually operates and interacts with the external environment. I mean, good organizations do this, but not all organizations do it well enough. And this is a major requirement as part of the process that we're following. So typically, the key elements that we are looking at when we are doing a prioritization of sustainability or materiality assessment is, well, what issues are, from an external point of view, from a climate and social change, are impacting us materially? How are we impacting the external environment materially? What are the financial materiality issues associated with this? And we are required not to put our finger in the air and say, well, we think it's this. You're required to validate it with your key stakeholders. You're required to disclose what you've got, either officially through regulatory agencies, or to your customers or your suppliers who have to do it. You look for evidence associated with this. There's the independent assurance requirements that people like organizations like BDO are going to provide. There's the ongoing due diligence requirements required to assess that organizations are actually providing you the information. This is a bit like, if you think about a bit like cash flow, you don't make business decisions generally without consulting your cash flow projections. Can we pay for this? Can we do this, etc.? This is like a sustainability version of cash flow. You're encouraged using this prioritization to make informed business decisions associated with this. So what I want to do is just try out to my colleagues again is, how important do you believe materiality assessment processes is for SMEs, and why should they bother doing it? So could I try that out to Martin first?
Yeah, Ray, obviously, as I mentioned earlier, I think it's a really critical process. I think it's the context as well, because I think from a reporting point of view, the materiality methodology tends to focus on topics rather than risks. So what I have been doing with clients is sort of like that translation between risk registers through to ESG themes through to government materiality sort of topics, because it's important that one, you understand, from a reporting point of view, you need to do that exercise, but you also then need to link it back to risks. And ultimately then, as we talked earlier about the control environment, ultimately you need to build mitigation plans to manage the risk and improve control. So the alignment between taxonomies is critical here. But the point that you make is really the fact that materiality does need to look at external stakeholders, look at the impact and financial materiality assessment, and come up with a double materiality, which I think is becoming, I suppose, a different approach to what we would normally do if we're managing, say, from a risk perspective, we'd look at impact, likelihood, and maybe time horizon. But here we're looking at that sort of external aspect as well, much more, and the impact that the organisation has on the external environment, not just on its own business objectives. So the process is really, really important. But I think there's a lot of spin-offs from this, but it does obviously ultimately help to prioritise and report on the key topics. What I would say is that what I've been finding is, as I mentioned earlier, if you start to look at internal reporting for boards around not just performance indicators, but risk indicators, and then work backwards, you'll start to realize the information you need, how it aligns to your risks, and ultimately how to set targets around your risk strategy or appetite. So a lot of these things are interlinked. So yeah, this is a really important part of the process.
So Michael, why should SMEs bother doing this type of prioritization?
Well, whether or not they're implementing the full CSRD, if they have customers or if they have regulators, or even for their own best practice for their employees, they've got to decide which issues, which risks are the most important ones for their organization. So they have to decide on what impacts us as a business and how do we impact the outside world. So you've got to start somewhere, Ray, and this is a very good place to start, to try and figure out what are the topics, what are the risks that are most important to our business, and what are the ones that we impact most on.
Thank you. Here's just an example of a prioritization done by the retailer H&M, and effectively what they have done, and it's a standard process for materiality assessment. They look at one dimension is the issues or the importance of these matters to stakeholders, external stakeholders and internal stakeholders, and what is the significance of these from an economic, environmental, and social impact perspective. And you can see here that their top one is economic performance. Their next one is climate. You can see that is an impact from their supply chain, etc. But it's it just gives you a view of what the big issues are for some of these larger organizations. And a lot of the times when we do these exercises, yeah, there's no one size fits all, but there are certain trends of things which organizations actually deem important. And as a either as an SME supplying somebody else or an SME trading on, to the wider community or market, you can see that some of these issues are actually very common issues, and that you need to have a view on them. Things like the use of water, waste, including packaging, etc. So it's just a view of what some other organizations have done. But I guess there are some key challenges for organizations in undertaking this exercise. One is that for some people, they find their business is just too complex to actually do it. It's kind of a difficult thing. Another thing is when you're actually particularly engaging external stakeholders on it, they expect their opinion to be as important, if not more important than others. And, you have to balance this about what is important for your own business, as well as to take into account what they're doing. In our experience, it's very unusual that the chief executive and the senior executive team wouldn't be involved in this process, and it takes an amount of time. We're working with one of the major commercial state organizations at the moment, and their chief executive is spending 2 hours a week steering committee alone with us, and then another 2 hours a week doing workshops with us, and then another hour a week actually meeting with myself to discuss issues. So actually having 5 hours a week of the chief executive involved in things like their priorities, their materiality assessment, just shows how important this is to certain organizations. And many organizations are unwilling to actually go out to external stakeholders and actually tap the value of their opinions and the opportunities that's associated with that. Many organizations are actually finding it very difficult to understand how to do impacts properly. I mean, very often, when we look at this from a business model perspective, and many organizations, unfortunately, and even large organizations, really don't understand fundamentally who their customers are, which may be surprising to you, but they really haven't thought about their business in the type of systematic way that this process actually requires. So I just throw it out to my colleagues again on the panel. What particular elements of the materiality assessment in your experience are particularly challenging for SMEs? Oscar?
Well, first thing, Ray, know the following. We are talking about materiality, but probably for most people attending the webinar, they are also very familiar to the double materiality, right? So because the real concept is associated to the impact the company is having with its own environment, and the other way around, the impact the company is suffering from that environment. So this is bidirectional, and that is one of the first things that they have to consider, and it's a tricky approach, because they need to understand both, which basically means that they have to go through an analysis of the inner processes, but also the impact of suppliers, their own ecosystems into the company. So first thing is to understand which is the environment or the scope that you have to consider, in that analysis. The second main concern definitely is associated, to everything related with the environment. And that depends on the industry, but definitely everything related with the carbon footprint and the analysis of all the industrial or services process is the second main concern they have to make a proper assessment. And the third concern is an overall one, right, is that they don't really know which information they have to collect to get a sense on every category to be considered under the double or the materiality assessment. So basically, it's a scope Second, which information they have to collect and which indicators they have to track. And more specifically and more in particular, the focus right now is in the E and in particular in the carbon footprint analysis.
Thank you. There's been a number of question and answers or questions raised by attendees. I'm just going to read out a couple of them. Maybe people could volunteer to provide an answer to those. The first one is, do you have a view on B Corp membership or similar to help with the process? Would anybody like to, including Kathleen, provide a view on that? I think B Corp is a worthwhile thing to do, certainly from a branding perspective. The process is also useful just to get your mind around this. So even as a high-level process to do it, I think it's quite useful. I know, Oscar, your organization has B Corp. How have you found that membership has helped?
No, you are absolutely right. B Corp is to some extent first step in terms of applicable frameworks, and it has a value that is highly recognized, you know, all across the you know, the world. I will say so. From that perspective, it's a clear advantage, you know, to go through that process. You get the company and the team prepared to a first sustainability analysis. Second, it brings some value because it's recognized. So it is always better, you know, to have that recognition than not having. But being clear, it is quite short compared with other regulatory or information requests coming from lenders, suppliers, etc., etc. So it's a very good first step. It's a very nice initiative, but companies in this point in time should be aware that they will have to go further and beyond the findings and the analysis that they will go through under the B Corp you know, process.
Thank you for that. Here's another question which is really set up for Kathleen and her team. We'll help answer it as well, but I'd like Kathleen to answer it first. Is that we don't know where to start. We don't have a dedicated team. We're very small, head office, and we do everything. And we have to do, you know, we just don't know how to start. So how do we move it forward?
Yeah, look, and I think that's probably a common issue with a lot of our client companies, and then just that there's so many competing priorities. It absolutely does need that senior leadership buy-in, and I think there was a few examples given there today. But we do have, I suppose, Enterprise Ireland does have a range of supports to help you and to help you with experts to help you with this. So we have a sustainability Kickstarter workshop, which is a free online workshop for Enterprise Ireland client companies, local enterprise office client companies, and Uderos client companies. It's 3 hours. We're running them every 2 weeks between now and the end of November, and you can register to attend on the Enterprise Ireland website. But it's just to develop an initial sustainability action plan aligned to the Sustainable Development Goals. We then have a sustainability leadership program, which is 6 workshops over 12 weeks. So this is more in depth, and it's again aligning your sustainability strategy to the Sustainable Development Goals. But the outcome of this is an action plan that you can share with your, you know, your senior leadership team in your company, and also share with the cohorts that you're on the program with. But we've one-to-one supports then in training and consultancy. So even this kind of prioritization assessment, prioritizing what's important, you can get support with that, with consultants. We have a directory of green service providers, which Ray and Santiago are on and are actively working with client companies to actually get help in prioritizing those issues. And that could be supported under one of our green supports called Green Start, which is up to 7 days support, is 80% funded. So it's not that you have to do this alone, and it's just to do it in bite-sized pieces. So I think, you know, forming a sustainability team, or if it's a really small company, it's one person driving this, but having a team with people across different departments, getting that expert help in then to help you prioritize the areas to focus on, baseline where
your voice is gone there, Kathleen, sorry.
Well, I think we, yeah, I think Kathleen realizes there. I think I'll move on to the next question there. Neil Cremens has asked a question. What are the timelines for business obligations for CSRD reporting? Michael, can I give that to you?
Sure. The very largest public companies and banks have to implement this next year in 2025. And that is in relation to their financial information for the year ended December 24. So they're in the very first wave. The second wave is what's called large companies, and they're companies with more than 40 million in turnover and more than 250 employees. And those large companies will have to implement this in 2026 on their financial information for the year ended December 2025. So they're the very first wave are public companies, banks, and companies that were already reporting under what was called NFRD. And I think the vast majority of what are called large companies will implement this in 2026 on their 2025 information. Hope that's not confusing.
Thank you very much, Michael. Nick, you have your hand up.
Yes, indeed. Thank you, Ray. I was just going to pick up the spirit of the previous question, and I'm not sure if Kathleen might be able to hear this, but I think we all need to recognize we're talking a lot of jargon here, materiality, sustainability, and so on. A lot of people in SMEs are simply intimidated by all of this. They need to get past first base in terms of even appreciating some of what we're talking about. And I think, therefore, busting the jargon is a critical point in terms of building confidence, building trust and self-confidence that actually this can go forward within the timelines that are now being created by CSRD and so on. Jargon busting.
Thank you. Oscar, you have your hand. Sorry.
I'll jump in there. Sorry, was I? Did you get any of what I said, or was I talking to myself?
You were talking for quite a while without us hearing it.
So will I give a kind of run through the supports again? Are we able to get that bit?
I think we got the supports all right.
Okay. Yeah.
And I certainly can endorse the amount of organizations that we've held, even on a small number of days, just to provide them with the methodologies and the approach. You know, a day's support from an expert is actually a long time, and you can actually make a lot of progress. There's a lot of answers out there, and there's a lot of proven approaches. So, you know, ask Enterprise Ireland for support. No point in making mistakes. A lot of these things are very similar. You go through the same type of processes. A lot of the issues are the same. You know, we with the very large organization that we're working with, we actually told them we would write their strategy first and tell them what to do. It's not going to be 100% correct. It's 80% correct. And they love that because it actually gave them a good foundation. And that's what good expert advisors can help you on.
Absolutely. And I suppose, you know, our key message is if you're an Enterprise Ireland client company, is to reach out to your development advisor. You can contact myself or my colleague Ankit on green@enterprise-ireland.com, or reach out to the local enterprise office or Ruth or us if you're a client company there. But there's support there to help you. There's experts there that are actively working with companies, you know, across different sectors. So it's to know, I suppose, look, you're not on your own on this. And you know, first good step if you are at the early stages could be to sign up for the Sustainability Kickstarter workshop or the leadership program, and then you'll be more informed then when you do bring a consultant in and to develop that sustainability strategy with your team and to prioritize those important issues.
Oscar, you have your hand up.
Yeah, two quick comments regarding the timeline for the SMEs. As Michael explained, beyond the regulatory timeline, SMEs should understand that the process of providing ESG information is simply inescapable. As part of the banking obligations, since next year, they will have to report a ratio, which is called Banking Book Taxonomy Alignment Ratio, which basically requires to collect information from companies not obliged to report. So irrespective, they are not, the SMEs, I mean, they are not going through the regulatory process, they will be overwhelmed more and more with ESG information. So the process of gathering, organizing, and tracking that information for SMEs is simply unavoidable, irrespective they are not under regulatory obligation. And the second quick comment regarding, Kathleen, how to help companies. Let me, this is a 15-second selling speech in here. I collaborate with a company, which is a technology company. The name is Seymour. There is technology out there which can help SMEs to really facilitate all this process in terms of collecting the information, getting an assessment on how they stand in terms of maturity, in terms of ESG, and to prepare the reporting, irrespective this comes from a stakeholder's request or from a regulatory request. So it's inescapable, but if they start doing, they use technology, of course, alongside, you know, helps or help from consultants, etc., the process is absolutely doable. And the sooner they start, the sooner as well they get used, you know, to manage all this information and to really get all these processes embedded in their strategy. So it is, I mean, it's huge, but it's not scary at all. Services and technology can help really very much to SMEs.
Thanks, Oscar. Michael, your hand up?
Yeah, the other thing I would endorse what Kathleen said about the support. The first thing I would say is that every company, every organization needs help with this, from the very largest to the very smallest. It's just getting the appropriate help. The supports that Enterprise Ireland have in place are excellent. They can get experts like Ray and others in to help their company with the benefit of those supports and have them paid for. But you can also educate yourself with some of the support. So SkillNet have some really useful grants to make the education process quite painless and quite economic as well. So educating the senior team is something I feel passionate about, as well as getting the support from organizations like Centigo.
Yeah, absolutely. And I've just shared my slide there to show just some of the supports that we have from the Sustainability Kickstarter workshops. You'll see this, we've won this Friday, 4th of October. The space is still left if anyone wants to register. Our Sustainability Leaders Programme, our next cohort of participants are beginning on the 22nd of October. We'll run more of these programmes next year, and that's actually in partnership with the Climate Ready Academy SkillNet. And then just in terms of the range of supports that Enterprise Ireland have, they're shown here in green, and I also show just in blue some supports from other agencies such as SkillNet and SAI, Uisce Éireann, the Regional Waste and Planning Offices. But the Climate Action Voucher, the Green Start, Strategic Consultancy, Green Plus, there are consultancy and training grants. So Green Start, I think, is really useful in terms of it's 7 days, it's up to 80% funded, and it can help companies with a wide range of activities, but one of those could be, you know, prioritizing your sustainability issues. And then we have a range of capital supports, whether it's implementing, you know, meters to better understand your resource usage, whether it's around a larger capital investment. And then we have a range of RD&I supports to really help companies develop more sustainable products, processes, and services. So I suppose reach out to your development advisor if you haven't done so already, or reach out to myself or Anchor on green@enterprise-ireland.com. I'd really like to thank our participants, our panel today, and our participants for joining. To Ray, to Nick, to Michael, and to Oscar, thank you so much for sharing your insights. I think our listeners will find them invaluable. So look, I just want to flag, I suppose, our upcoming webinars, and you're going to join us again for our webinar on the 16th of October. So thank you for that. And that will be how to carry out a material assessment, which we've discussed today, but in a little bit more details with CSRD in focus. We also have another webinar next week on the business case for biodiversity. So that's next Wednesday, 1 to 2 p.m. All our webinars are available to watch back on the Enterprise Ireland website. And just like for more information, check out the Enterprise Ireland website or send us an email. So I think we've run a little bit over time, so apologies for that, but a big thank you to all our panel.
Thank you.
Thanks to you, Kathleen, for inviting us.
Thank you, everyone. Bye.
Bye.